Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we are ready to get started on our analysis. Let me go ahead and grab the bias chart. Okay, and let me go over to that, and we're going to let's get started now. Before we actually get started with our analysis, so I just want to give you a heads up on my expectations. And yeah, I was obviously traveling last week, and I was on vacation, so I didn't see that the ISM services numbers. I was thinking, or manufacturing data came in Friday, and then we had services data come in. Both those numbers are really good, and I didn't get the chance to see the employment component, but based on the reaction, I think that most people are probably expecting a decent number, a jobs number. And like I said, I think what the market is hoping for is just not a repeat of last month. And if we have any number that's above 120,000 jobs, I think it's going to be, I don't know if it's going to be necessarily bullish for the dollar. I think it's just going to be more of a relief, and you're probably going to get not much of a reaction. The dollar is going to get crushed today if we print something less than 120,000. I think, because then that's going to give the market some concerns that the jobs picture is not a one-off. It wasn't an anomaly. It was more of a, we're actually developing a trend of lower job creation, and I think that is that's what will really hurt the dollar today, and that could actually, like Paul said earlier, and I agree with him here, that could put us back up at 112. And I'll redraw all this stuff here in a bit, but we currently trade at 110.65, but if we have a really weak number today, we could make our way back up towards 112, in my opinion, before turning lower. A strong number, we could push, let's say, excuse me, whew, Friday's coming off vacation, getting up at 3 o'clock in the morning. I still yawning. Told you guys I was going to be yawning all week. But if we have a good number today, like let's say we print in line or better, there's a good chance that we're going to break through this 110.25, and we're going to start gunning for these lows next week. Not necessarily today, but like next week, we start making a move back down towards towards 109. Yeah. Oh, am I paused? Thanks. Thanks, man. All right. Sorry about that. Okay. Good news is I didn't move my charts a lot, so. So, thank you, Paul, or Steve, or Kip, whatever your name is. Thanks, George.
Kip. I'm Kip.
Thanks, Steve. All right, Kip. Bye. See, it's just early in the morning for me. So anyway, I didn't show you guys a lot. I didn't change a lot here. But what I was saying is, if it's a weak number, I think that the euro could push back up towards 112. And then we'll get an opportunity to short the euro dollar going into next week. 112, higher, somewhere up there. I think it's possible. Excuse me. If it's a strong number, though, like let's say in line, 170,000 or better. Here, I'm going to remove some of this other stuff. I think we could actually drop below the 110.25. I am going to go into non-farm payroll with a very small short euro position. I am, hold on, I'm just removing this. I removed some of my trade off the table this morning. We were right here, actually. I'm short from 110.80 and 110.85 actually, and I don't mind being short a small position based on how strong the data has been. But I'd like to add, maybe if we get a move back up to 111 today and we can hold that, then I'll add a little bit. On a strong number, if it's a really like a blowout number, like let's say we create 200,000 jobs, I'll probably add and look for a break below 110.25, and start looking for a move back down towards 109 next week. but that's the euro, and actually, since we're here, we'll reiterate the importance of 111, 111.10. We wrote down 111.50 yesterday, but today, yawning again, today we're going to have to go out to 111.80. So resistance is 111.10, 111.80. Okay, and then support 110.25. That's obviously really key support down here. It is still a bearish bias. While we're below 112, it's bearish. Okay? All right. Let's take a look at the cable. Now, I did not short the pound yesterday. I actually played the euro pound to the short side again. But the pound, you know, I'm going to, since it looks like the flag pattern, at least right now, is not playing out, I'll probably end up getting rid of that. But, you know, if you look at the cable's doing its own thing. I mean, but today, it's going to be, you know, dollar related. So whatever we, you know, the moves that we get here are going to be dollar related. You know, if it's a strong dollar or a strong, you know, jobs report, the pound's probably going to come off. If it's a weak jobs report, the pound's going to rally. Now, I don't know why my line got kind of screwed up from yesterday, but that's okay. We're going to bring that down a little bit. Let's remove that. Let's push this up just a hair. Okay. All right. So right now, 130 is resistance. Now beyond that, we're talking about the 38% retracement, which is 130 and 130 and 3/4. So this would be the 38% retracement of the high at 135 down to the most recent low. 38% retracement, I think, is going to be really key resistance today. So I'm going to actually write down 130 and 130.75, which is actually 130.78. But you know, I like to round out the numbers a little bit rather than get too, unless the market is being very specific about hitting a certain price time and time again, like if it was hitting 130.78 and we kept hitting 130.78, I would write down 130.78. But you know, right around this 130.75 is going to be a good resistance. Now also keep in mind that we have 131.20, which is the previous support, which is going to be really key resistance to shift the bearish bias. Right now it is still a very bearish bias in the cable. Okay, but you know, we get a bad jobs number, we're gonna rally up to, you know, 130.75, and look, I think that this is possible because if you think about it, just think this through really quick. Let's say we get a bad jobs number. You know, we got to do the if this then that type of analysis. If we get a bad jobs number, we jam up here, we break the stops of people that are short, we hit this trend line, we hit that 38% retracement, and then we reverse, right? Just enough to screw everyone, right? All right. Now the flip side is if we have a good jobs number, you know, like a nice solid, you know, let's say we print 200,000 jobs, we're probably going to come down and break through this support here. There's a lot of support. We spike through it here, spike low, spike low, spike low. That comes in at 128.75. Okay. Because if it's a good jobs number, we're going to come, you know, flying through here like a really solid jobs number. So 128.75. That should be pretty key support. All right. Okay, let's go over to the Swissy. Oof, man. To top it off, I'm going to be out and about tonight with some friends doing some beer drinking, so I have to rest up for that. Yeah. Bunch of us soccer dads are going out. Doesn't that sound like fun? Yeah. I'm in for the beer. All right, so here's the Swissy. So the Swissy, we're up challenging our resistance that we wrote down yesterday, right? Now I'm not going to write down yesterday's resistance because we're there. You know, that doesn't make much sense for us. Um, but you can see we got a nice little wedge developing, don't we? Right as we come up to the 786 retracement. It's a bullish wedge. Okay. The breakout point is at 98.35. Man, I need some WD-40. Did you guys hear that? Did you guys hear that? Can you hear this? Can you hear this? You guys can? That's my, yeah, the creaky noise. Yeah, that's my desk chair. I haven't WD-40'd it in a while, and it used to do that a couple of years ago, and I WD-40'd it, and obviously, I'm just gonna do this all day. How do you feel about that? Uh huh. Yeah, you like that? Uh huh. Uh huh. You like that? Uh huh. Uh huh. Some of you might say, "Wow, what is he doing over there?" Like that's the bed. Oh, is that the bed? No, that's the chair. No, is that the bed? George says it already sounds like you started drinking some beer. Apparently, that's what I do at 4:45 in the morning on a Friday, just ahead of non-farm payroll. Okay, sorry. I digress. Okay, so here we go. Big resistance is going to be 98.35. Support today is going to be this low right here. Uh-huh. Yep. Yeah. Right there. Okay. 97.65. I can't crack myself up. 90, you know, when I snort, that means I even found myself funny, which is not, I usually don't even find myself humorous, but that was pretty funny. We are in a range here in this. Okay. Dollar Swiss. My eyes are watering because I'm laughing. Hold on, I gotta remove my glasses. Hold on. Oh gosh. I started wearing glasses. Not like real glasses. I'm wearing computer glasses. Yeah. It's helping, I think. Mm-hmm. All right, there's a dollar yen. Now here's the flip side analysis to what we were just looking at. So we were just looking at the dollar Swiss developing a wedge. Well, look at the dollar yen. That's developed, and you guys have known, right? I think every day this week we have written down the only dollar pair that we've had as bearish is being the dollar yen, right? This is the only dollar pair that we've had all week as being as bear. And look at that wedge it's developing. So it tells you that if we have a weak jobs report, this is where you want to be, right? On a weak jobs report. Okay. Damn, Kiwi's hitting new highs again. By the way, the Kiwi's at 127% extension right now at this 72.80. I'll get to that in a minute. Stupid Kiwi. Damn thing's so strong. Okay, so anyway, 100.15. That's going to be pretty key support here. Resistance, which will take the downside pressure off the dollar yen, well, is 100.75. Okay. It's minor resistance, but that will take this downside pressure off. So, I mean, if we have a good jobs report, we'll start retracing a bit. Okay. Let's go over to the Canadian. So obviously the Canadian, this is a For me, this is a really, really, this is a really big. I mean, what I'm hoping for in the dollar Canadian is a weak Canadian jobs report and a strong U.S. jobs report. Because, as I've pointed out to you guys already, crude oil is breaking lower. Okay, crude oil is getting a foothold below 46 bucks. Crude looks like it's moving lower here. I'll just do it. I'll just do it this way. Okay, so here's crude. All right. So crude's breaking lower already. Whoops, I didn't want to do that. Crude's breaking lower already. So we need a weak Canadian jobs report and a strong U.S. jobs report. Because if we got crude oil, then you got all the inner workings of a strong correlated trade. You got a breakdown in crude, and you'll get a breakout in the Canadian. Okay, so that's what I'm hoping for. Just because I'm hoping for something doesn't mean I'm going to get it, but that's what I'm hoping for. Now, if that is the case, here, let's get rid of this. If that's the case, then we have a 130.57. So 130.55 as a massive breakout point. 130.55. That's major resistance. Support. Well, right now, since this trend line held so well yesterday, it's at 129. Right? I'm going to be bummed out if we stay in this pennant still. The apex is getting really tight, but it still can tighten further. I hope this doesn't happen. I'm going to be really bummed out if it does today. I'm going to be bummed out if we do this. Then make our breakout. I'll be bummed out if that happens, because that means we're going to have to wait another week for this to really, come to fruition. Which, like you, I'm impatient, so I want to see it. I want to see it break. Okay, this is a range. We are on breakout watch. Okay, let's get over to the Kiwi. So the Kiwi, as I told you, it was just hitting new highs. We had 127% extension here just now. All right, that comes in right here. Key resistance comes in at 73 cents, obviously. Also, the one thing with the Kiwi you got to keep in mind too is we've been monitoring this channel. Okay, so just even if we hit new highs, so even if we hit 73.15, okay, if we hit 73.15, that doesn't necessarily mean it's broken out. We have because notice the trend line here. This is basically this channel. I mean, you can actually adjust that just a hair. Okay. We can make it a little higher. We can actually break 73 cents, trip stops, and then reverse. Okay. Look, I don't think the New Zealand economy, I mean, the RBNZ maybe, the deputy finance minister maybe suggested that they can't cut rates. At least they're not going to now. But their economy is going to be slowing at a pretty rapid clip with the slowdown that we've seen in China over the last couple of years. Milk consumption is really starting to slow. New Zealand exports, and especially as if they can manage to cool off the housing market, then they're going to have a little bit of a problem because they're going to have a really mega slow economy. So eventually they're going to have to cut rates, in my opinion, but it just may not be in the near term. So the New Zealand's going to have all sorts of problems, and especially if we see a risk-off environment. I sure hate to be long the Kiwi. If I was a trader or an investor, I hate to be long the Kiwi and the market gets a bad case of risk aversion, which, while when the S&P is up here at 2100, that's not uncalled for. I mean, I could very easily see the S&P back down at 1900, within the next few months, because we're just basically knocking our head up against resistance in the S&P. So if the S&P pulls back, or let's just say over the next 12 months we pull back towards 1800 again, last place you want to be is long a risk on type of currency like the Kiwi. So anyway, I think it's going to have all sorts of problems coming up. I just don't know how far we're going to go here. Now, support for today, what will turn the Kiwi back down is a move back below 72. Well, I don't even think 72.40, probably right here at 72 cents. We have to get back below there. Okay. I'm going to keep us in a range for today. We break through 73 cents and we hold above there, then I'm going to have to change my tune on this. Let's see. Okay, when I come back, we're going to do the Aussie, the dollar index, peso, Swedish krona, Norwegian krona. So don't go anywhere. I'll be back in a few minutes. Thanks, everyone. Wait, hold on. Oh, yeah. All right, back in a few. All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we have about a half an hour until non-farm payroll happens, and you guys are funny. Some of you guys tweeting me stuff is just hilarious. The squeaky chair, the yawning. I mean, come on. Andrew and Ziggy. Anyway. Oh man, one of those days. One of those days. Okay, let's see here. I am looking at now with the Aussie, and the Aussie, we depends. I don't know if see how we pass through this trend line and then back through it. I don't know if that's really valid here. What is valid though is this resistance. That's pretty key, and that's going to come in at 75.50. So if we have a strong jobs number, or excuse me, a weak jobs number, 75.50 breaks. This would be a pretty bullish breakout, right? 75.50. Oops, 75.50. That'd be pretty bullish, but we're in a range right now. That's going to be, hasn't been able to go anywhere this week following that S&P, downgrade of Australian debt that obviously no one's paying attention to. Support is here at 74.60, but I'm going to write down 74.50. Oh, maybe it is 74.60. Because see, all right, when I draw a trend line, when you see this trend line here, okay. Well, I always get a question. Hey, Blake, do you draw a trend line, to the wicks? Well, actually, this is going to be more specific, more to the wicks, or do you go through the bodies? And it depends on how many points of contact I can get. So. We got 1, 2, 3 in this case. So actually, support is going to be down here at 74.50 on any move lower. So we're going to write that down. Not this low down. That's a spike low following the S&P comments, but the S&P downgrade, but I'm going to do 74.50 as being pretty critical support. Okay. All right, let's go over to the dollar index. So the dollar index, we have a flag and a pennant. Okay, so when I say and a pennant, we have to do this. Ah. Ah. Stop. 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 Damn it. All right, fine. All right. Okay. So we have this let's grab this too. Okay. So you see this, we have this bull flag. We broke out of the bull flag. Now we have this pennant. So, I mean, obviously we're just waiting for non-farm payroll today. Strong jobs number, and we bust a move to the upside, and a weak jobs number, we bust a move to the downside. So that support will be at 96. Resistance is at 96.35. Support 96. Resistance 35. And it's still in a range. I don't want to turn bullish on the dollar index until you start breaking higher. I mean, these are all bullish formations developing, but there hasn't been any follow through yet. So you got to wait for a roll upside break here, but on both accounts. All right. Okay. Let's go over to the peso. Now the peso was really freaking strong yesterday. DK in our chat room, he's like, yeah, I want to short the peso, but I'm scared. And I'm like, I know, it's if risk appetite turns south, then you're gonna break out. But what we can do here, okay, I think that's going to be more significant. Our resistance right now is 1894. Okay, 1894. If we break through 1894 in the peso, we're probably going to make a run back to the upside here. Okay. Yeah. All right. Support. So if the stock market takes off like a bat out of hell, we're going to break through this support here. Okay. And then we're going to challenge that support down there. Whoops. I don't know if the peso is going to be that influenced by, I don't know if it's going to be that influenced by the jobs report. I think it's going to be more influenced by risk on and risk off, frankly. For those of you that are, trading the peso, 1860. So I'm going to write down 1860. Oh yeah. Oh yeah. Okay. U.S. dollar, Norwegian krona. Okay. Now, this is also a currency pair that if here, let's get rid of that. We don't need that right now. And we don't need this. You know what? I'm just going to delete all of it. Because the thing about the Norwegian krona right now is it's strong. And if we have a strong jobs report and the dollar moves higher, you've got to really be thinking to be bullish the U.S. dollar Norwegian krona, because if crude oil stays weak, which I'm going to go with the running assumption that, I mean, we're holding below 46. If I wasn't, if crude oil was back above 46 and we just probed it yesterday, that'd be one thing. But because crude oil is holding below 46, if we close the week below 46, I have to imagine that the U.S. dollar Norwegian krona is just going to still go up. Okay. And I just really want to be long. The tricky part is trying to figure out exactly where to be long, of course. But like I said, the thing is you don't want to be long a currency like Norway's currency that is relies so heavily on crude production. You just don't want to do it. So, in my opinion, I'd rather be on the long side of this than the short side. The question is where, where to get long. I mean, we came out of this descending wedge, which was huge this week. I can't remember if I traded it or not. I don't think I did. This is going to be support for today. $8.42. Resistance at 8.52. Okay. Oops. 0.842. 8.52. Oops. 52. The non-dyslexic way. And we're still in a range, but man, I would sure like to see this thing have a bullish breakout, because that would give us some damn good direction. If we can, it's like the Canadian. If the Canadian gets above 131.50 or 130.50, if the U.S. dollar Norwegian krona starts breaking higher, and I've got crude rolling over, I'm good. I'm all about trading the U.S. dollar Norwegian krona for to the upside, and maybe even start targeting some of these higher levels around 880 to 9. But we need the jobs report today to be strong in order to do that. Okay. Swedish krona. And the Swedish krona. There we go. Okay. So same as yesterday. This is a 50% retracement. That's what held us, which is a shallow retracement, guys. I mean, anything less than a 50% retracement, 38% retracement, 24% retracement is shallow. That means the likelihood of a continuation is pretty good. Okay. Oh, I should put that back in actually for reference. Okay, so 860, 850, that's it, right? 850, 860. Now I'm going to ask you guys a question. Do you recall before we're done here, by the way, with the bias chart? Okay, so do you recall before I left for Kauai, do you remember what I said is two prerequisites in order for the Fed to raise rates? What are the two prerequisites? Do you guys remember what they were? Yeah, gold and silver are selling off a little bit here. I see that, Scott. Thank you. I didn't see it until you mentioned it, so thank you. Gold and silver and copper coming off a little bit. No Brexit, and the June jobs numbers have to come back. This month. Well, not this month, but June. We have to see a better jobs report. So we got a Brexit. Do you think the Brexit, because we got the Brexit, do you think that the Fed, because we got a Brexit, but the stock markets basically have gone back to recovered, they've recovered, and do you think that the Brexit was a big deal to the Fed? I think it is, but I don't know if it's. I think that what the Fed was thinking is probably what we were thinking, or at least I was thinking, that a Brexit vote could really cause consequential damage to the equity markets. And the unsaid uh, 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 mandate, in my opinion, of the Federal Reserve is to make sure that asset prices stay elevated for a few reasons, inflationary reasons, but also because they want to make sure that wealth creation stays solid, um, in my view. All right, so the stock markets shrugged off the Brexit pretty pretty well, and so I think the implications of a Brexit, maybe in the Fed's view right now, are not all that important, not enough to really sway them to not raise rates, or at least it's not going to be as important as it might have been if the S&P dropped. Like if the S&P, we're sitting at 2100, if the S&P was at 1900 right now, different story, right? Different story. See, the Fed is looking for an opening. The Fed is not, the Fed is looking to normalize rates. They're looking to normalize rates for a couple of reasons. They want to normalize rates because they feel that this, environment of low interest rates is not conducive to continued growth in the U.S. economy, and they also want to make sure that they have the tools necessary that they might need to combat any type of recession, or maybe what could be the implications of a Brexit somewhere down the road. So the Brexit may not be a big deal right at this very moment in time, but 2 years from now, maybe the Brexit weighs on the global economy a little bit more. But if the Fed sees this as a window of opportunity to raise rates, can they raise rates this month? That's the question I have. So, if this is a strong jobs number, like let's say the jobs number was May was an outlier, and it was just more of an anomaly actually, and then this month we show decent job creation. We create 150,000 jobs, we create 180,000 jobs, whatever. Does that open the door for the Fed to raise rates this month? See, that's the question I'm asking myself, and that's why this jobs number I think is really important, because if it is a decent number, when I say decent, 130,000 jobs or better is a decent number. Anything less than that's going to be pretty bad. But if it's a decent number, the dollar could, even if it's 100, let's say it's 130,000, it comes in below expectations. The dollar may dip a little bit, but the dollar might just rebound right back. So, anyway, that's what I'm thinking about this morning, guys, and that's why I think if the dollar is, or excuse me, if it is a decent jobs number, the dollar might get a pretty big boost today, especially on a really good number, because that then everybody will start thinking, will the Fed raise rates in July? And you're not going to hear that now from people. You're going to hear that. You're going to hear that not now from people. You're going to hear that from after the fact, because people are really good weathermen, analysts in the market, right? They're all good weathermen. Like, let me tell you what happened in the weather today. People always tell you what happened in the market today, but the reason why what is the factor that separates the men from the boys, or the women from the girls in the market, is people that can actually see ahead of time, and that's why you have to think about that right now. Okay, and you got to think about um, uh, what what uh, what could happen if we have a strong jobs number. Now, if we have a weak jobs number, the dollar's probably going to get hit because people are going to start thinking that the dollar's going to get hit, and it's going to have a harder time to recover because people will start thinking, man, maybe the Fed has to stay on hold for a while. They're not going to be able to raise rates. Okay, we're about 12 minutes out from news. Let me see if I can take a couple of questions. These are things that obviously I'm thinking about. I want to discuss with you. I'm not going to be able to answer all questions today. On non-farm payroll days, I just can't. You guys know I run out of time. Simon says no. Ultimately.